Hello, guys. Today we are going to talk about the classical investment, which is the mutual funds, and how different mutual funds, specifically the Parag Parikh Flexi Mutual Fund, is doing in the market. What are the recent changes that has happened to it? The reason why going to discuss about the Parag Parikh Flexi Mutual Fund is because Parag Parikh is known to be uh, great for the value investing, and I definitely wanted to discuss what are the recent changes happening into those mutual fund, right? But first, disclaimer: I'm not a sub-registered analyst. All the content in this video are for educational purposes. Please consult your financial advisor before making any kind of investment, taking care into your risk profile. Okay? Now let's start. Uh, so, very recently I was looking into the Parag Parikh mutual fund. I found it very interesting. The management to be very reliable, and they have been doing very deep value investing with very good returns in the recent years, right? Uh, so let's go into the fund overview a little bit. 84,000 crores of AUM. That means people are trusting this mutual fund quite a lot. 0.78 beta, that means it's very low volatility compared to the market. So if it is more than one, it is high volatility. If it is less than one, it is lesser volatility. 7.4% of alpha over the Nifty 50 index, which is really, really good, right? And the core investment style is value focused, as I had mentioned about Parikh. They look into companies with deep value, invest there, and provide great returns back to the investors. What is the asset class distribution? The asset class distribution in the Flexi Cap mutual fund is specifically Indian equities is 68.4%. Foreign equities is 16.2%. The foreign equities generally give a little bit of currency stability back to the portfolio. The REITs and INV ITs is 8.1%. Basically, REITs will provide you fantastic stability of the portfolio return. So generally, the REITs nowadays are available at 5.6% yield, and that brings about quite a lot stability, right? Cash and margin holding is right now 7.3%, which is good. I have also seen that recently it has changed to 19%, and the reason why they are keeping cash in the portfolio is primarily because they want to invest when the markets are down, right? Everybody keeps telling that, hey, FIIs are selling, why the DIIs not buying? The DIIs will buy when there are deep value in the market. Companies like Parag Parikh or other mutual funds will come in and start investing when the valuations are correct. And that's why they are holding the cash and margin as of now. The industry allocation, this is very important. 32% is into financial services. So we know that lately financial services has not been doing good in the market. So hence, there is a huge investment in the financial services company. This is kind of contra investment. Again, information tech is also a contra investment. We have seen that lately Infosys, TCS, Tech Mahindra, HCL Tech are not doing good. Partly it's because the world is trying to figure out what's the place of AI in the information tech world, and partly because the markets are down. So this is also a kind of contraband. Power is a very good sector which is growing right now because of the advent of data centers and the usage of power because of the EV vehicles coming into picture. That the need of power is really, really great, and the demand obviously drives the value into the market. Consumer service, this is an evergreen sector. This is never going to go down. Automobiles is 7.8%. Uh, this is again now India is going from a lower middle class economy into a middle class economy, right? So a lot of people are buying cars and automobiles, and hence obviously the industry allocation reflects the economy for any mutual fund, and obviously automobile plays a good role in it. What are the core US allocation? The core US allocations is very much needed because to bring in the currency stability. Lately, rupee has been not doing so well with respect to US dollars or with respect to euro, or for that matter any other Western currencies. So a holding in US equity market is going to give you the currency stability in terms of the dollar valuations. The core US holdings for Parag Parikh FlexiCap funds are Microsoft, Alphabet, Amazon, and Meta. And we all know these companies. Microsoft is majorly into enterprise and cloud. Alphabet is more into AI and search ads. Amazon into global scale retail, and Meta is a social mode. Now let's look into the major part of the portfolio of Flexi Parag Parikh FlexiCap mutual fund is also REITs and InvITs. Right? It has a strategic yield of around 8.1%. The major REITs where Parag Parikh FlexiCap mutual fund has invested are Embassy Office Parks, Brookfield India REIT, and the Power Grid InvIT. Right? They have also invested into Nexus Office Spaces. That's another REIT available. But the investment into Embassy Office Parks, which is also in collaboration with Blackstone, is really huge. It has gone to 2.93% of the overall allocation, whereas it was earlier around 0.6%, if I remember correctly. So there's a massive increase in allocation into the Embassy Office Parks REIT. Similarly, into Brookfield India REIT and Power Grid InvIT, because this brings amazing stability in terms of returns into the portfolio. So there is a huge investment going on from the Parag Parikh FlexiCap mutual fund. Now let's look into what are the changes that has happened in January 26 and also in February 26. In January 26, we saw a increased allocation to SDFC Bank because there is right now a valuation correction that is happening, and there is a focus on the long-term return on equity, and hence there is an increased allocation for the SDFC Bank. Whereas the Infosys allocation has been trimmed down, the HCL Technologies has been decreased. But coming to February 26, we have seen just the opposite. The Maruti Suzuki in the automobile sector is a new entrant. Alphabet and the Bajaj holdings, Alphabet in the US equity market and the Bajaj holdings in the Indian equity market, there are fresh additions into that. Whereas we have seen a contrabate on the IT sector, and there is an increased investment into Infosys, TCS, and HCL Tech very recently. I was going through the whole fact sheet, and there are more additions that has happened, namely Indraprasth Gas and Mahanagar Gas are the two new additions, but those are very minute, very meager quantities that has been added into the portfolio. If you look into pure performance, if we compare to any other flexi-cap right now in the market, it's very more or less the similar returns that we're getting. But when the market is going to go up, Parag Parikh flexi-cap fund is definitely going to do much better because of its additional alpha and lower beta, right? The volatility is low, but the outperformance compared to the Nifty 50 index is really good, right? Let's look at the lump sum performance snapshot. If the 10-year return is around 19%, 5-year return is around 22%, 3-year return is 23%, and 1-year return is around 25.4%, which is absolutely great in terms of numbers for any mutual fund. Right? Now, what is the verdict? I am not going to dictate anything here. Obviously, take advice from your financial advisors, but the Parag FlexiCap fund shows global resilience because of the inclusion into the US stock market. Uh, Low beta indicating lower volatility, high alpha indicating that whenever the market is going to go up, it is going to perform really well compared to the Nifty 50 benchmark. The cash cushion, the company, the mutual fund is holding right now a good amount of cash level to be invested in the market when there are deeper corrections and good valuations uh, which are presenting itself as opportunities. Hence, what I am going to do personally is that I am going to buy and hold the fund for a 5 to 10 year horizon, right? Friends, if you have watched the video till this point of time, definitely you have liked the content. Please share, subscribe, and like the video and support me as much as possible. And I'll try to bring in this kind of content back uh, and more content like this, right? Thank you guys. It has been really good uh, making this video. Thank you.